Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live here with another live session with you all in early Thursday morning as the market has just begun and wanted to share some views with you about a couple of stocks and also answer your queries. I know it's early morning, so not many people would be online at the moment, but I want to do the session because I don't get much time throughout the day. So I thought that it is better off to take the session on, and then probably later on you can watch the video once it's recorded and uploaded by YouTube. So a very good morning to you. Hope you all are doing well and your trading and investment journey is going well as well. Very cold up in the north here, and so hopefully within a month this will also go away and we'll have a very good spring season that would be coming up. Shashank, a very good morning to you. Let more people join in and we'll get this session in earnest. There are a couple of stocks for the next 3-4 months that I believe are now primed for a decent up move that I'll discuss. Plus, we'll discuss about the markets and I'll answer your queries. Another announcement I want to make here is that for the past few weeks, I have not been active for YouTube members, which I'll do from inshallah this time around. From today onwards, you'll get all the updates there. There was some issue with that feed. So that will start running. So if you become a YouTube member as well, you'll get all the feeds going through as Patreon and WhatsApp members are getting. So I'll definitely try to get that rectified from today onwards. And so that's there. Second announcement is that hopefully from February onwards, I'll be online in a new setup. And I'll be online 3 days in a week, and that will be probably Tuesday, Thursday, and Sunday. And would have a decent live session, not 20-25 minutes as I'm doing now, probably around an hour, 45 minutes to an hour, and will answer your queries and in an apt time as well. I'm setting up everything in a particular place where we can do the sessions and have the interaction for a longer period of time, and hopefully you'll like the new setup, everything. So that's what I'm trying to look at, and then we'll have the channel probably move forward in a better manner than what it is doing at the moment. So hopefully you are all doing well. So let's begin the session. We'll discuss about the markets first. So as expected, markets are range bound, just above 18,000, but then coming back into shape and coming back below 18,000 and then going up again. So it is a volatile, you can say, week. We have had a couple of weeks of very volatile move in the index, and also in the mid cap and small cap arena we are not going anywhere. And that was what was expected at the end of December when I was talking about the markets being because of the market being range bound, and that is exactly what is happening. So in my opinion, 18,100 200 could be the upper end for the Nifty, and 17,200 300 could be the lower end. We might go towards 17,200 300 around budget, because at the moment we are not going there. I think probably by budget or after budget we could be in for a surprise, and we could be headed towards there. So that's one call that I have to make with respect to the markets. The mid and small caps, there are pockets that are doing well. There are pockets that are performing. So in the mid and small cap arena, we are having a situation in which things are looking much brighter with respect to the stocks that you would be holding on to. So if you are getting into companies which are growing or are set to grow at more than 20% and are trading at under 30 times, that is the golden rule of probably buying into, you can say, very good quality companies at decent valuations, I think you'll be fine throughout the year, and you'll make decent amount of money. Especially in the small cap arena, there are stocks that have fallen big time and are looking very attractive if you look deeper into their numbers. So things are looking much better in the mid and small cap arena rather than the large caps one, especially after how Bajaj Finance came out with their numbers. And the way most of the companies are coming out with their you can say feeds, for example Asian Paints has been falling, and it seems like that the numbers might not be that great, and the valuations look stretched, so may just consolidate. And other stocks have either moved up or have gone down on bad numbers, and the numbers are not set to improve probably in the next 2 3 quarters. But there are companies in textile, there are companies in defense, there are companies in the you can say diagnostic space and in retail, which can perform going forward in the small and mid cap arena, that one needs to look at in detail. So that's the call on the markets overall. Now coming to my point of a couple of stocks that could end up doing extremely well probably in the next 3 to 4 months. These two stocks are a seasonal plays that do well in you can say summers, and I have picked two of the best. One that had not been having very good margin picture over you can say the last 2 years or so. The margins have not been that great in the last two summers, especially in the last four quarters. The numbers have not been that great. So we are looking at Voltas at the moment. Sally, I'll answer your query. I'll answer all your everyone's queries after I discuss these points. So uh, Voltas is my pick. I believe Voltas, whatever downside it had over the last 3 4 months, it has had, and the numbers have been extremely difficult. The numbers have been not that good at all. So uh, because the margins have taken a beating, but we believe that the margins are bottoming out at the moment. Current margins that it is having, probably it will have the same margins for 1 or 2 quarters, but FY24 is set to be big, and FY25 even bigger. So I think market will give a re-rating to Voltas. Around these levels are pretty interesting levels to get into. With a 10 15% stop loss, you can buy for a 30% upside, around 30 35% upside over the next 3 4 months. I think over this period you will see that the performance will be much better compared to say what we have seen over the last 1 or 2 years. So this is a company that has performed well over the years, but last 3 4 quarters have not been that great, as I mentioned, and there have been pressure of the competition as well, and market share going away. But things are getting better on the ground, so I believe that this summer could be much better for something like a Voltas than other companies. So that's one of my picks. The second pick is Blue Star. I believe that even though Blue Star has gone up so much and is currently trading near its highs, but even if you look at its charts, or if you look at what the performance in terms of the numbers have been, both have been pretty strong. And Blue Star itself, the management has come out over the last 2 3 quarters talking about the margins being better than what it has been, and talking about the business being better now, and that the margins would have bottomed out 2 3 quarters ago. So again, in this sense, Blue Star being a market leader in a lot of segments in the summer field, I think should end up doing extremely well. Currently, it is trading between 1200 1250. One can accumulate here if you get a chance to buy lower. Say if you get a chance to buy around 1200 1180, that's the best you can say around range to get into, between 1150 1200 on any declines, and then hold the stock for a target of 1400 going forward. I think Blue Star is something that will that will shown through over once the summer picks up. So end of February, mid Feb, I think things will get much better. And these stocks start performing, from my experience. I'm saying that over the last 10, 11 years, what I've seen is that these stocks start performing just about now. Probably now or next week, they'll start picking up. And then you'll not get a chance. Once that move comes in, that move is of around 25-30%, and then the stock dies down completely. Yes, I know Varun Beverages has also declined from the top, but I think Blue Star and Voltas are something to be really looked at. Blue Star because of its performance technically, the way the stock is performing, as well as the numbers, and Voltas because of dismal numbers that it has produced over the last 3-4 quarters, and the fact that it had a stiff competition, and the stock is down 25-30% from the top. Both these reasons give me confidence that there is a lot of margin of safety in both the stocks, compared to something like a Varun Beverages. If the numbers go up and down because of the move that it has had over the last year or 18 months, there could be a situation of the stock going nowhere. Although I'm pretty confident in the third stock as well, Varun Beverages, that a move will happen. But the third one I'm invested into, Blue Star and Voltas, I'm not invested into, and they look pretty good at the moment to buy into. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. So there was a question about Asian Paints. So Sally and Donna, I think Asian Paints is a buy at these levels. I think it's about time people should get into it. I don't see 2600, 2700 coming in unless there is a big mess on the numbers, or there is some corporate governance issue, which I doubt will happen. I think these are times to buy into it. The stock has done nothing over the last 12-15 months, and the stock is trading at 75-80 times earnings. If you look at 1 year forward, then we are looking at 70 times earnings, which is extremely attractive compared to its 3 to 4 years PE picture. So I think it's a buy. 20 to 25% upside over the next 1 year, very much possible. I don't think the stock could only gyrate in this region of 2900, 3200 for another year. I think there will be a breakout in Asian Paints. So for investors for 2 years, 3 years, this is the best time to get into something like an Asian Paints. For traders, they need to avoid probably once it stabilizes above 3050. That's when one should get in. But for investors, these are very decent levels to buy into something like an Asian Paints. So that's the call. I think you're asking about Tata Elixir. Shisha. So I would say Tata Elixir around 6,000, 6,200, very good levels. I don't know what is the price today, but the way it has come down, I've always said that top quality companies, uh, when they are cheap, that's when you need to get into it. So I think Tata Elixir at around 6,200, 6,100 is a very decent buy. From a 2 to 3 year perspective, I think a 30 to 40% upside over the next 18 months is very much possible. Once the IT rally begins in earnest, we could see a huge move in something like Tata Elixir as well. Holding DMart and Info Edge at 10% loss, what to do? Depends on your time horizon, Santosh. If you can tell me the time horizon, I can let you know as to what needs to be done. Info Edge, I'm pretty confident that 3,500, could end up being a bottom, unless again the numbers are howlers. Then probably it's headed lower. But I see a lot of, you can say, pessimism in something like Info Edge, and there comes a point where there's always a contrary trade. So again, Info Edge around these levels, if somebody is a little bit of a risk taker, should buy rather than exit. So that's the call. If your time horizon is more than 2 years, then I don't think there is a need to worry in both the stocks. One good result over the next 4 5 quarters, 6 quarters would take both the stocks higher by 30-40%. Whatever selling had to happen, especially in Info Edge, that might have taken place. I think 3,500 is a very decent support. So somebody looking at Info Edge should end up probably buying into it at these levels rather than exiting. Dmart is a different thing altogether. So I don't know what kind of a PE Dmart would command if they keep on giving 10% profit growth, or something like that. The growth has not been that great at all. I think give it one more quarter in terms of in DMart, because one, if the next quarter is pretty good, we could see the stock again at 43, 4400, rather than selling at losses. So if you have more than 2 years in both the stocks, Santosh, then hold on to both of them. I would say give it a chance for at least one more quarter, review the numbers in the March quarter numbers, and then probably decide on the stock, and give it, and then take it from there as to how things would pan out, because these are pedigree stocks. They should, and pedigree companies, they should perform over a longer period of time. See, Pidilite is slightly stretched. Again, a stock that I hold, but I believe that it has moved a lot, may consolidate or decline a bit. Titan is something that can be accumulated here, and on any 3 to 5% decline. If you have Titan, hold. I think we are headed beyond 3000 on the stock very soon. If you don't have, at these levels, you can buy 20 25%, and every 2 3% decline, keep on adding Titan. So that's the call on Titan. I'm very positive on it. If I had some funds, I would have definitely bought into Titan and DMart uh, at these levels. I believe in DMart as well. There has been a blip in one quarter, but I think things should move along pretty well. And remember, companies like DMart or Vedant Fashion and all these companies have high promoter holding, and even those stocks that are free float are with marquee, you can say, clients or marquee individuals. So it's very hard to make that stock go downwards if the stocks are with, if the companies, you can say, shares are with a very strong hand. So who do you know that will not sell? Don't see a lot of downside in both DMart uh, and Titan in the long run. Okay. See, LTTS has moved up a bit, but you can accumulate. I feel if we talk about the IT stocks, I think this could be the year for the IT stocks. I think after a 20 25% index fall last year, especially marquee top level IT companies in mid cap and large caps should end up performing pretty well. What are marquee top level companies? The companies that are even in difficult circumstances have grown their sales by 20 25%, have grown their profits by around 20% or more. They will perform because the valuations have become much better now. So I believe that it's time to get into such companies, and probably over a 1 year period, the returns could be pretty decent going forward. I would say rather than Phoenix Mill, look at other companies in the textile domain, especially small or micro cap, under 1,000 crores, under 5,000 crore companies, small caps. Uh, they look pretty good. I won't like to mention names here. I have made some videos here and there, and I've mentioned them, but they look good rather than buying into large brands in the same space. So that's the call there on my behalf. Loris Labs, interesting. So I think IT should perform. Pharma is a different kettle of fish altogether. And if things really get going in Europe and US big time in terms of their industrial and you can say GDP growth, then pharma should perform. I think pharma will take a little bit more time, but again, you'll get better valuations buying here. So in my opinion, yes, Loris Labs is something at these levels one can accumulate after such a fall that it has had from 630 640. I think these are very decent levels to start buying. But remember, there are other pharma companies that look much better. And talking about pharma, I'll come up with a pharma video maybe tomorrow or day after. I was preparing that. So we'll come out, and I'll let you know as to what are the five companies that I like right now in that space, because there are larger companies in the pharma domain that have corrected tremendously and looking very attractive in terms of you can say valuation. So rather than going too much on the lower side of the you can say market cap, we can buy larger companies with safer returns, better returns going forward. So we'll come up with that. But Lawrence at these levels look attractive if somebody can take some risk, can buy at these levels as well. So Soumitra, same here. I won't mince words here, but for the last 15, 16 months, haven't made any money at all, and have been holding on to my positions. So that's the hardcore fact of the markets, that you make big for 1 or 2 years, you don't make money for 1 or 2 years, and that's how it is. So you have to manage funds, manage holdings, manage your portfolio in a manner that you end up eventually making money over a 5 to 10 year period. So that happens. uh, Things are looking brighter on the mid and small cap side now than probably in early 2022. So I'm pretty hopeful that this year retailers will end up making money rather than only fund houses, etc., or people who are putting up, or companies who are putting up IPOs with fat, you can say, prices. Talking about IPOs, viral as a question on Nika. I think Nika now is better to be left alone. I think Nika is headed towards 100, but that doesn't mean it will stay at 100 or 95 or something. It would be extremely attractive to buy into it at 9500 rupees. Worst to worst, it is headed towards 80, 85. That's the worst case scenario that I feel is happening with Nika. But over the next 2 years, you'll see how Nika will perform. So I read a lot of, you can say, notes on you can say, IPOs and how they perform here in India, and big IPOs that they come out with, and high prices and everything. These kind of IPOs do not perform for 2 years, at least 2 years from their IPO date. So if we take Nika for example, 2021 November, or around that time, so probably by 24 or so, things will look much better than right now. But that doesn't mean that we'll not find a bottom at the moment. I think going forward in the next 1 year or so, you'll see in fact, in the next 1 or 2 months, you'll see Nika bottoming out, and from 24 onwards performing extremely well. When I'm saying extremely well, you'll see Nika all over the picture, all over television channels, that it has done so well, 50%, 100%, 150% returns, like that from the bottom. So if somebody is patient enough for the next 2 to 3 years, they'll make a lot of money in the company, because the company is good. It is just that the valuations were so stretched that everything is getting bashed up. Plus the situation in US Nasdaq, etc., is not that great, and so new age IPOs are getting bashed up. You look at even Zomato, etc., they have been slammed as well. So that's the call. So SRF, Ganesh, I feel that SRF is an avoid. In fact, the whole chemical sector is an avoid at the moment. And even though they look attractive, I'm still not looking at them to buy into, because remember that the move in chemicals began in 2016. And so it has been full 7 years of move. That's huge. I won't be surprised if in the next 2 to 3 years these stocks are down 50, 60% from their top, even 70% from their top. And then people will be, there'll be a lot of hue and cry as to what should one do in all these kind of companies. So rather than getting into them when they are moving downwards, just need to avoid and look at other sectors to probably get into. Advanced enzymes for the moment is avoid, a very decent company, but somehow the management is not coming out with decent numbers. So it's an avoid as a stock at the moment. So KPI Green, I hold, Mr. Pawar, and a very good morning to you. I feel that it can probably gyrate between 420 and 450. That is the range I feel will happen for the next 1 or 2 months. But I think from March onwards, we'll see a huge move on it. I won't be surprised if by the end of the year we see the stock at 600, 700, between that 650 or so. I think it should end up performing pretty well over this 12 months period. So that's the call there. Bajaj Finance, avoid the numbers have not been that great. Let the numbers come in and then buy. If you have a 2 3 year point of view, yes, you can buy at these levels. That is means you need to buy into these companies when the numbers are bad. So that's the call. Short term, it's an avoid at the moment. So that's the call. There, somebody asked about Dixon. I feel Dixon is a buy at these levels. One can start accumulating. I see downside till 3200. I won't say that there is no downside, but these companies like Dixon, DMart, Bajaj Finance, etc., they need to be bought at when things are looking very bleak in these companies, and that's when you make money, say in Asian Paints. But I don't know the time frame as to when these companies will come back. Even a Zomato, say if it goes to 47, 48, you will have a situation where one can start accumulating and looking at it from a 2 3 year point of view. That's the call there. दो तीन साल बोलते हैं सब और एक साल में ही ओपिनियन बदल देते हैं. Well, that happens, Amitra, and the reason for that is I agree with you, that happens in some of the stocks. The reason for that is the whole you can say business environment changes around that space. For example, IT. So if I you would have asked about, say, a Mastech at 2700 about a year back, 26, I would have said that you one should start buying because 2800 was a strong support. It has broken that, but one can accumulate from a long term point of view. And I would have said that it would not go down below 2400. One can accumulate, and this can be 5000. See, you need to take everybody's word with a pinch of salt. We all assume a lot of things and then come out with our views, no matter who that is, even if it is Warren Buffett. And the point here is that nobody knows as to what will happen, say 1 or 2 years down the line. But we as analysts, we as being in the market for the last 10 years, 9 10 years or so, have an idea as to where the money could be flowing and where the move could be happening. But at the same time, if you are holding on to some stock at higher level, say a Mastec, for example, if somebody has bought at 2700 and holding on to it, now at 1700 is not the time to sell. Basically, that's what I mean. See, a DMart, if you have bought at 4800, 3600 is not the level to sell. And that is why I feel that if you can increase your time horizon to 1 or 2 years in these stocks, they can perform very well, and you'll end up eventually making money rather than selling it, buying an inferior company and losing more money. So that's my whole opinion when I say that you have to hold on for a couple of years more, because you need to wait for the tide to turn. That's the only thing. So that's the call you have to take. So I can give you one example. I won't name the stock, but I bought that stock with a lot of analysis, say about even not more than a month back. 1 month or so had passed by, and I thought that this can be 2 3x over the next 2 3 years, and has come down 50 60% from the top. A very decent company, top brand, doing well, will come back into profitability and a lot of things. Now, from that particular price that I bought into, the stock fell 6 7%. Now, after having had you can say accidents with 2 3 stocks, 2 3 companies, I needed to take a call that whether I would see this stock go down further, say 20 25% from my buy price, and then come back after 2 3 years to probably a semblance of some respect and some profitability, or I should exit the stock. So I took the call of selling that stock and moving into something else. You can take a call of holding on to that particular stock and probably making money 2 3 years down the line. And that's why keep on calling that your time frame, you can say, increases big time. For example, everybody is talking about defense. The defense stocks have done exceedingly well over the last 1 year. For instance, and I'm just giving you an example, no recommendation. For example, somebody buys into a BEL, Bharat Electronics, at around 9800 rupees, whatever it is trading at, and the stock had made a high of around 120, 125. I'm just giving you example. I don't know the exact pricing, but it has come to 98, 95, and people buy that. Okay, everybody is bullish about defense. It looks good. Government is doing a lot of things. Everything will come through. Numbers will also go through, and numbers will be pretty good, but the stock may not perform, and you'll see the stock with very good numbers at 75. And then people will ask that, okay, what is happening? And then the experts will tell you that, okay, our view was 2 3 years down the line, and the stock has fallen, say, 20% from the levels you have bought into. It's better to hold on to. And the stock should end up performing 2 3 years down the line. The problem with most retail investors is that they don't hold on to the stock for that long. Even I have not held on to many companies for that long, but I'm trying to do that. So that is exactly what everybody mean by saying that you should buy for 2 years time frame, and that is exactly why the stance changes for those individuals, and I'm included in that. See, again, Samitra, it's not the case of China plus one failing. The point here is that the valuations are starting to look at Dixon trading at around one time sales at 3,000 crore market cap, going to 40,000 crore market cap, and then going down from there. You look at chemical companies moving up 10, 15, 20x. Now, you cannot expect those companies to just keep on moving up 10, 15x and all that. They have to correct even when things are good, and that is where smart investors end up booking profits. So that is where experts come in, or analysts come in, or where they analyze the valuations and end up making money, and probably I'm sorry to say, but putting those scripts to retail investors, and that's where retail investors end up buying the stocks at higher levels. So you have to analyze valuations. Unless you do that, you'll end up buying into companies at the fag end of their bull run. So that's the call I'm saying time and again, and that's why I'm saying that IT is something to be looked at now rather than any other sector, with the kind of you can say fall we have had. And I mentioned about the stocks that we can look at. Even something like Tata Elxsi at these levels do not look like there's a lot of downside, so there's a lot of margin of safety. The move may happen and may take 6 8 months, but the move will happen in here because the correction have taken place. Whereas the downside move will happen in those stocks, and there's more chances of happening where the move has been big on the upside for the last 12 months. All right, guys, thank you. Thanks for being online. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Can you support me on Patreon, YouTube, or WhatsApp? You can get a yearly WhatsApp membership as well. You can email me for that. Thank you.